Good morning, guys. I hope you guys are doing well. Um, Starting off this morning a little bit early. Felt like doing some trading a little bit earlier today. Kind of maybe give you a little breakdown of what I look for every day. I've kind of developing a model that's been working out pretty good for me lately. I'm just now starting to implement like the new day opening gaps and the new week opening gaps. Still don't know. I mean, they're good framing for targets, but still kind of figuring out how I want to use them personally in my trading. Um, so let's get into it before 9:30 opens here. As far as some stuff that I like to look for. So, let me get over to my Google Docs. It's not the right
when I needed to.
Oh, good. You're so grown up.
I don't need to do your work.
Thank you. Let's see here. Oh, it got bright all of a sudden. My white screen. Okay, so here we go. Let's see. This is hold on. Oh, I forgot to roll the disclaimer. That's just a disclaimer I gotta roll here. Alright, there we go. Okay. So let's get into this. Let's see, where are we at? Trading plan. Let's see, where's the wisdom? I think it's in here. Gotta organize all this stuff. As you can tell, I have a little ADHD, so I get distracted with a lot of different things. But I'm glad I got the video up and running today. Hopefully it stays together on me. So, things to look for every single day. This is kind of my secret sauce, if you will. Probably not mine, but stuff I've taken from ICTs and kind of compiled it into my own. Alright, so the first thing we usually look for is there a big opening gap from yesterday's close, from yesterday's close to 9:30 New York Open, and is it more than 75 ticks? That can give us kind of like an idea of where we would, Caleb's model, ICT's model, where you have the first presented fair value gap, and then you're kind of aiming for the midpoint, the consequent encroachment of that gap, the 4 o'clock to 9:30 open, kind of in that range. Looking for the so that's just the first thing we kind of look for at 9:30. And then for the second thing, which side is price respecting on the first presented fair value gap, bullish or bearish? Read order flow at these levels. What is it telling you? So what that looks like is, let's go back here. So the main thing that I've learned that actually helped me be profitable my first month of ICT trading, I'm about to show you that here. So actually, this whole video will be kind of more about that, but let's look here. Where's 9:30? 9:30. 1 minute. Okay. So, how we watch order flow, right, is so we have this first presented fair value gap at 9:30 on this day. We want to watch and see what it does when it reaches to this level. Does it create a bullish order block, or does it create a bearish order block? That's actually the main two things that I look for: a shift in order flow, creating either a bullish or bearish order block. So as we got up to this price, 930, what did order flow do? Order flow, we broke above the opening gap. This candle here, we found resistance off of the consequent encroachment. The next candle here, we formed a order block, a bullish order block, which we then later, hold on, give me one sec. Sorry about that. You'll have to bear with me on some of these videos because I got kiddos running around. Okay. So what do? We created a bullish order block right here, which this candle came back and retested the upper half of that order block before carrying us higher. So that's what we read in order flow at these at the PD array areas. So I think even down here we were trading off of a 4-hour fair value gap if we were to look at this, if I remember correctly. And then if we're trading off a 4-hour fair value gap at this area, you're going to want to watch, instead of just placing a trade at that 4-hour fair value gap, you aren't going to want to wait for, at least for me, I like to wait for some sort of confirmation that price is wanting to go higher. So that's why I took a trade here. We were trading inside here. This is not the 4-hour fair value gap. This is, I think, like a 930 gap. The first presented fair value gap at 930. Couple charts back. But so what do we got? So let me actually see if I can find this for you and outline it, because I'll be doing some kind of reviewing of trades and stuff like that in this stream until 9:30. See where we at here. 4-hour, 4-hour. Let's do 4-hour here. Then open that guy up. Sorry, there's a lot on my chart. Don't look great yet. Still getting used to all the markups and kind of figuring out what I like to use and stuff, or what's relevant for me. So I think it's right here. So we have the 4-hour fair value gap right here in this area. So this is the 4-hour time frame. We have a gap, and below that gap we have an order block here. Okay, so going back to our 1 minute. Yep, this is what I was talking about. So we got in this 4-hour fair value gap. So what I really like to do, and so besides ICT's models of trading, like if you were to not trade his models as far as like the 930 for fair value gap at 930, Caleb's model, the 2021 model, if you were to try to frame for yourself some trade ideas that are not necessarily associated to, I'm sure this is associated to one of his models because he does talk about higher time frame PD arrays and all that stuff, but kind of helping maybe a little bit, from my understanding, structure it in a way that I can understand it. So for me personally, what I like to use, I do like to use his models, the 930. But if I'm looking for something outside of that as well, I also like to use the higher time frame fair value gaps and stuff like that. So let's go back. So we're looking inside this 4-hour fair value gap here. And what we're going to want to do is we're going to watch order flow inside this gap. Is the market telling us? Is it communicating to us it wants to go higher? And that's the beautiful thing about reading order flow, is you're able to read it and it tell you, yes, I'm willing to go higher. That, plain and simple, like, is saying, hey, Mr. Trader, I'm inside this 4-hour fair value gap, and I plan on taking it higher. So what do we have here? We have a breakaway gap. Let me do this. Okay, we have a breakaway gap here. Never came back to retest it. Hold on. Hey, Malik or Benaya, what do you need? Dad is doing work right now.
But Mom hurting today.
Okay, yeah. Dad is doing work right now, but I'll come. What do you need? Do you need something?
I'm just having a little banana. Well, Mommy's helping me, but you can help us for a minute.
What do you need help with?
Mom and me help.
What does Mom need help with?
He's hurting.
Okay, give me 1 sec. Alright, I'm sorry, guys. Okay, so sorry about that. Oh, well, I guess I'm not sorry because I got family and stuff I gotta take care of, and um, wife just woke up, so she's taking care. The whole family just woke up, so it gets a little hectic. But all right, so we're talking about. So we got a breakaway gap here, and this is around the around usual where people want to trade at, or where ICT the kill zone area. So we got a opening gap, breakaway gap. We have order blocks forming here. And then we have it come down to that area. That's where I took one of my trades. It didn't fully quite close inside that area, but that's where I went ahead and took one of my trades. We have, excuse me, we have a order block here as well. We could have probably taken a trade there as well. And then we have a gap that had formed at a very important level where the 930 opening fair value gap, first presented fair value gap here. And we have another gap here that formed inside that. So came down to that here. Could have taken another trade. And then you had a order block here. And as you can see, these order blocks never get... this one got closed below it. But when you're forming these, it can go... The price can go all the way down to here. To the last red candle. Now, if for example, I can show you the shift in the order flow here. So as we're reading the tape, we have this order block here, right? Price went down, rejected, kind of shook things up a little bit. Now we have, see, price went down again. So let's see if it respects this order block here. It does. Price went up. We got this one. And then this red candle here. price is just trading inside that red candle, not breaking below it. We have this candle here, not breaking below it. So it's respecting every single order block to support support price higher. We got this here, and then we made another red candle here. Price didn't break below it. We got another red candle here. Price didn't break below it. And then we got another red candle here. Now this is where you have the shift right here. So you had this red candle here, and you had a shift below. So you formed a green candle here. So this candle supported price. After it formed a green candle, it didn't go higher. Instead, it went lower. And then we had this candle form. So now this was the shift in market structure through here. Because it is a little bit harder to read, just because you're probably wondering, like, well, it broke below this candle here or this candle here. Yes, but you have to look at what was before this green candle printed. What was the order block before that green candle printed? It was this one. So this is the one that you're looking at to hold price until we make a new higher high. So if price broke down here, then we would have a shift in order flow. But it didn't break down here because you can see the green candle. This made an order block because you had a full green candle close above this. So then this becomes an order block, supports price. And then you had a green candle close above all this price action. So you'd have an order block here. Price came back down. You had a couple green candles that closed above this. So that became now where you're expecting price to hold. It held. Now you had a green candle that closed above this red candle in a bullish move. So you look at that. Okay, we come down. Now you had a green candle close in a bullish move. It didn't close above that. But now after it closed, it didn't make a newer high. And then we broke down because we broke below this green candle. We didn't make a higher high. And we also broke above this red candle here, which was that order block. So what we do, we broke down here. Now it shifted off of this order block here for a little bit. That's what that green candle is. Now we can look at this green candle supporting price because we've broken down, the market's broken down. So now we can look at resistance. Now this green candle is going to provide us resistance. So that means like price shouldn't trade above it anymore. If it does, then this idea is scratched. But now it's providing us resistance, a shift in order flow with this candle formation here. So reading tape is honestly the best thing that has really improved my trading, because I'm able to read the tape and figure out where I want to get in on the higher time frame PD arrays. So even if you didn't have like the 930 opening gap and all that stuff, if you have your higher time frame PD arrays that you're waiting for tries to trade into, you're most likely going to be able to formulate a trade, whether bullish or bearish, to that. So that's kind of one of the main things that has really made my trading a lot easier. It's given me confidence to trade inside the order blocks, because I think when I first started to trade, there was a lot of lack of confidence in the process, and I just didn't know I knew what I was looking for, but I didn't know what I was looking for. For example, I had these fair value gaps at the higher time frame leveled to, you know, like the 75% retracement, the equilibrium, which is consequent encroachment, and the 25% level. That's how I graded these. And I was just going to take a trade as soon as it hit equilibrium. It did provide, like, I mean, I would have been in drawdown a little bit, but eventually it would have went, you know, my way. I just like reading the order flow. So I had the gap, and then I placed a trade here. It was just above equilibrium, but I mean, I like that way better as a trader to be able to see these higher time frame PD arrays and then read order flow within that on the 1 minute, and then get a really good solid entry where your stop loss is really small. So that's what I like to see. And that kind of is really what changed my trading, so that I could um, yeah, trade with more confidence, instead of just entering off of a level like consequent encroachment, or but watching order flow on the 1 minute and then entering off of that. So that's really the bread and butter of that concept. Let's go back here. So, ooh, got bright again. Is there which side's first? So, which side is price respecting on the first presented fair value gap? So, here we are trading above now the first presented fair value gap. So we found support off of it here. And again, if you wanted, you could trade off of, instead of just trading as soon as it hits that level, especially for beginners, if you don't have enough confidence to enter right off of that first presented fair value gap, watch the order flow. So what do we have? We have a green candle here that should act as a order block. We closed above that here, so now we have a shift in order flow. And then we have a gap here. We have a red candle down here. It didn't really give you, I mean, you could probably enter in off this red candle, but honestly, there's not a lot of entry. We do have a liquidity void here at this area that you could probably enter off of. We do have a breakaway gap here, so there are some things you could probably formulate a trade on, or just the fact that you have a breakaway gap here after you hit the first presented fair value gap. First presented fair value gap, you have it break away, make a new gap. You could enter a trade as soon as that candle finished printing. You can enter a trade, and then maybe take some partials here, and then try to aim for up here as a target. So yeah, that's where I think it helps people. Let me give you an example actually of this. It helps people in the fact that they're not just placing a random trade off of a area. So let's take this example here. So ICT does talk about how to pick like the right fair value gap to trade off of, according to time and according to discount or premium. But let's say you're just learning these concepts and you see this gap here, or you see this gap here. Let's take this one. You see this gap, right? One, you're in a higher time frame fair value gap, but let's say we didn't know that, right? And then you see this red candle print as soon as it hits this fair value gap, and you go short, and all of a sudden it goes against you. Well, you have what could contradict this trade on going short? You have this gap here that you would like to see it be, go into, and then you're going to want to see how it reacts to this gap. If you're short, you take a trade off of this, you have to read the order flow. So you would be waiting, instead of just taking a willy-nilly trade here, you'd be waiting to see a shift in order flow. This is not a shift in order flow. A shift in order flow would be if you had a red candle here, and then price broke below that red candle, forming green candles, and then another red candle, and then, forming red candles, a green candle, and then more red candles, forming order blocks as you go down. This is not a shift in order flow. So since we didn't have a shift in order flow at this place here and we moved higher, we can now change our bias that, oh, maybe the market actually wants to go higher because now we're forming order blocks as we keep going. So that really, those concepts really helped me a lot. I'm not saying you can't place trades off of fair value gaps as soon as they get into them. I'm not saying that at all. That is definitely a way to trade. Like especially right here, they went down. You can trade off that. I'm just saying you're gonna want to watch premium discount, and you're gonna want to know what's happening on the 4-hour time frame, because this chart tells you that, hey, there's a possibility we could see a reversal inside this gap. Anyways, that's where there's a lot to his concepts, but a lot to. Hey, that is doing some work right now. What do you mean?
I can tell you one watching. I love the Lego.
I know I love Legos too. Dad's gonna play with you in a bit, okay? So, all right, let's get to where's discount and premium. So, all right, let's get to where discount and premium. We got 15 more minutes. And I'm gonna make a video about this probably today for further clarification on everything. I was gonna do this just live and then edit it and put it in, but with all the distractions this morning, I think I'll just do another video. All right, so how to draw out discount and premium. So for me, ICD does talk about this actually in his, as far as what I've seen in his 2024 mentorship. Discount and premium. So if we I like to look at the daily range. A lot of the times, like where is price trading into? Where's the range? What range are we trading in? So, like for example, if we take our fib tool, this is a range that we're trading in. This is another reason why I was confident in this trade here, even though it's a counter trend trade. I was confident, more so because it was at a discount inside this range, and we made a higher high here. So we're trading inside this range. We went down to a discounted area and we bounced off of it, and then I took my profit there. But I usually use daily ranges to kind of determine my my bias. So let's see. So this range here, we have price came in at a discount before making a new high. We have, let's do this daily range here. Price broke above this daily range, but if we're looking at this daily range and we're looking at trading it on the next day, here it'd be like that. Just let me outline some stuff here. Let me take that off. Let me take this off. There. So price came in down to a discount area before moving higher. According to this range, the premium is up here, discount is below here. So we can look at price. It traded below, came up higher, and then eventually took out this, made a new higher high. And then now, after we have that, we have a new daily range that formed here. Now this is trading at a premium already before taking it higher. So technically this price here, this day never made a lower low or a higher high. So because of that, you're still going to want to use this range here. Because we're still trading inside of this range. This day didn't make a lower or a higher high. And then sometimes I'll use like for higher time frame analysis. I can use, like, for example, that range there from that bottom to that high. We can see prices just trading inside there. It reached below equilibrium at a discount, and that's where you see a lot of buy up here. Because all this 1, 2, 3, 4, 5, 6 days of price action is trading inside this range. So you can look at higher time frame ranges, and then you can look at yesterday's range for like a shorter term perspective. That's kind of what I look for. There is some nuance to that, looking at the daily ranges, but that's kind of what I look for. Draw out a higher time frame PD arrays at premier discount. So kind of what I was showing you guys, the 4-hour time frame PD array. Determine what market did pre 9:30, was it bullish or bearish. So basically, like ICT says, look at previous session and then expect that to be a target for the next session. So we have, like, for example, today I'm expecting it to be bearish today. It might pull up to be bullish, but I'm kind of expecting it to be bearish. So we have this huge liquidity void here we could probably trade up into, but we have liquidity here, here, and here and we were trading during London and Asian, we were trading higher. So I'm expecting New York to either make a judo swing down, maybe come up back to here before trading lower. But yeah, I'm expecting it to, for some point in the day, to take out this sell side from Asia and London. All right, so yeah, just recognizing what the previous session did, and then kind of framing a trade off of the liquidity around those areas. All right, let's see. Let's look at, so outline previous day high and lows. So these can be terminus targets. So, you know, the power of 3. If it is bullish, it should take out previous day's high. If you're bearish, it should take out previous day's low. Stuff like that. What is the higher time frame reaching for? Liquidity voids or buy side. So yeah, just look for, you know, a higher time frame PD array for it to reach down into. So, or sell side, buy side, or sell side, which sell side would be here, large sell side would be here, and we got a fair value gap here. Let's look at the 4-hour actually. I like the 4-hour a lot. So we got a liquidity or a fair value gap that price filled in here. You got a fair value gap. So in the larger scheme of things, this would be a range from here to here, because we've broken structure here. So we could see it. That's kind of where I'm framing the trade, where we could see it go down to this level, because this level is at a true discount inside this range. So we could probably target down here somewhere to fill in this gap that hasn't been filled yet. That's kind of where I'm targeting. But it might not go down there, but as a target, you can kind of target the areas that never got filled in for your targets on the higher time frame. Some sort of draw on liquidity. See where we at here. Okay. On previous day, buy side, sell side, mark the first presented fair value gap at 9:30 and draw that out in time for that week. So that's pretty self-explanatory. What does the previous day's candle look like? Was it large range or doji candle day, as it could give you insight to more realistic target expectations on price movement. So what that looks like is, for example, let's go to the daily chart. Daily chart. All right. So we had a huge range day yesterday. So we're probably more realistically I mean, we could trade down to here. Realistically speaking, I think today might be a small range day. It is a Thursday, so I mean, we're probably gonna be, trading somewhere into this candle first. Not really making. We could make big moves, but it's a large range day, so we're probably gonna keep our targets low for the day, and we're just gonna be more taking short-term sell side and buy side instead of aiming for a long-term sell side or buy side. So yeah, that's kind of how I'm gonna frame my trades for the day. That really helps in framing your trade. So if you're expecting for a big move down or whatever to buy side or sell side, you can for a large after a large range day, you're gonna want to target like low hanging fruit for that day. If you're a short term like scalper, you're gonna be like, okay, here's some buy side here. We have a shift in order flow, so I'm just gonna target that. Kind of be more really short term trading on these days. Not really looking for bigger moves. So that's one thing that'll probably save you a lot and from getting chopped up after being in a winning trade is to take profits early on these sort of days. All right, and then where did price start on the new day? Is it at close or bottom? So what that looks like is I'm not actually this. Ignore that. I'm still learning this as far as what was taught to me, and that was something I just notated. What are previous session high and lows for targets, which is kind of what I already talked about. I just kind of outlined the time, so 6 p.m. to 2 a.m. London, 2 a.m. or 2 a.m. to 5 a.m. is the London, and then the London mixed with the New York session is from the around the 7 o'clock to 9:30, and then New York starts the 9:30. So yeah, so usually you get like London session liquidity. If it's not taken out before 9:30, you could probably aim for that, but usually sometimes it does take it out at like 7 o'clock. It starts to take out London, and then it gives New York session. If you're bearish, it gives New York session to be able to, it permits New York session to go lower if it already taken out London session liquidity. But yeah, so that's kind of like the things that I look for every single day. How I frame my trades, just kind of like a more higher, like a bigger conceptual ideas before I place my trades on the order flow, the 1 minute order blocks and the fair value gaps and stuff like that. So we are now 7 minutes till open, so I think we did a pretty good job on time there. If there's anything you guys want to ask me, feel free to leave comments below, or I need a place for you guys to reach out to me if you guys have any questions. I would be more than happy to help as much as I could. Honestly, I'm going to probably refer you to ICT's channel, just because, I mean, he's ICT. But if you guys want any questions or need any help with anything, you can let me know, and I will try to do the best of my abilities to help you guys. So, all right, let's get in the trading for the day. Just to let you guys know too, this is like my don't trade order when I order, because the stream is a little lagged. I think I have to pay for that for it to be, and plus my internet is not that great. But what was I gonna say? Shoot, got a mind blink there. Anyways, if you want to have any questions, like I said, feel free to reach out and ask me. I'm just gonna be getting into my trading ideas for the day now. So let's look at the 1 minute. We have new week opening gaps up here, new day opening gaps, and then there's a new day opening gap here. We have a huge buy or sell side liquidity resting below here, and then I'm just gonna be watching. And then we have this huge liquidity void up here, which I don't know if price was gonna trade up into that today. Honestly, today, um, I don't have a lot of thought of where it's gonna go. I do think it's still gonna go down, but because we had such a large range day, I'm gonna be trying to just trade off of like shifts and order flow and just PD arrays, and probably aim for lower time frame objectives for liquidity. So we're just gonna wait for the first presented fair value gap to help us kind of give us a knowledge on where we should see price go. Excuse me. Let's see here. We do have. Let's see. We'll aim for the range. Probably the midpoint of this gap here. First target. Hold on. So we have taken out most of the liquidity that was formed on yesterday and through Asia, as far as the liquidity resting above these equal highs. We've taken it out here. Like I said, sometimes it usually takes it out at like 7, starts at 7 o'clock, starts to, kind of draw towards that liquidity, and then it gives permission for New York to trade lower. So we're just going to want to see, and wait till market opens, and then we can start trading. Probably after talking. No, I'm tired. No. I have a sales job, so pretty much talk all day and feel bad for my wife sometimes because sometimes when I get home, I'm so tired of talking. And she needs, to be able to talk, but I'm so tired sometimes. All right, we got 2 minutes. 2 more minutes till market opens. So this is where I get quiet because just waiting for market to open. I am gonna try to get better at streaming stuff. Get some music on and maybe play that while I'm kind of working out through working all the stuff out through the charts. Looks like we might trade at consequent encroachment of this new day opening gap before 9:30, which kind of sucks because I was hoping to get extra. Good. I'm gonna get me some water. keep forgetting to use my be right back my stuff. I just now thought of that while I was getting more. I was like, oh shoot, I should have put my be right back little animation. Okay, yeah, let's see what we got. Alright, so we got buy side here. I already traded to the consequent encroachment of the new day opening gap. We traded off of that right there at that candle. And then now we're just gonna wait for 9:30, the first presented fair value gap, to kind of help us frame some trades. We can remove that. And like I said, today might be a little choppy. So I'm just gonna shoot. I'm just gonna sit on my hands until we get a gap. Yo, the time that it takes for what I'm recording until it shows on the screen is ridiculous. I gotta figure out how to change that. I'm still learning YouTube, guys, so bear with me. All the stuffs for live streaming. Alright. Still sitting on my hands. I'm just gonna wait till we get the opening gap. Alright, so now we have started order flow. And just to let you know, guys, if I draw a box like this, it's gonna be for a order block, and if I draw a something like that, it's gonna be for a fair value gap. Green means buy, and red means sell. As far as what I think it would do. Got mean threshold. So I've just learned this the other day. Mean threshold is inside of order block the basically what would be consequent encroachment of a fair value gap, which would be the midpoint of the gap is consequent encroachment, but for order blocks it's called the mean threshold right here. Don't ask me why, I don't know, but I'm sure. I haven't finished his 20 or his mentorship program yet. I've done 2021 and 2024. We've been watching that, and then haven't done. I'm working on finishing the mentorship. The only reason why I'm not entering in a trade right now off of these is just because I'm waiting for the first presented for value gap. And it's still like all the things that I taught you this morning are part of my plan. But I mean, it might change in the future. I think everything is pretty stable on what I like to look for. Just kind of getting that outline, but waiting for the first presented fair value gap I found to be, I'm still testing that one out because I got burned the other day for not waiting for it, and it was just chopping up and down, up and down, up and down. So, as it looks like it is going to do now. So, I'm glad I waited for that. Because usually, the first presented fair value gap at 9:30 is when the market will start to really make that move towards buy side, sell side, or towards a PD array to bounce off of, and then we can find support off of it. So that's kind of like the three scenarios. Either it makes the gap and you go lower. It just went into this order block here. The bottom, we should find, if we do get support of this one, you see that? See how it didn't shift the order flow yet? So we had it never fully closed below this one after making the green candle, because it didn't close with a wick. It just closed with a wick. It didn't close with a body. Instead, that wick just wanted to go down to this order block before finding rejection, and now we're moving higher. So that's not a delete. See here. Here we go. So you can see it's okay for us to wick below it. But yeah, it can wick below it, but the bodies need to stay above it. Now what you have is this one. So we might see the shift here. If we can break below this green candle, that'd be nice if we want to see a shift in order flow. We just now closed below the bodies of this order block and that order block. This is not an order block yet, actually, because a green candle hasn't closed above it. But I am going to be sitting on my hands until that until there's a gap or a fair value gap. And that might take a while. So we're just gonna sit on our hands. Alright, we might have the first gap here. So white means it's neutral. White means it's neutral, green means to buy, and red means that it's to sell. Right, normally this would be buy, but because for the first day presented, the first present for value gap, I usually put it at neutral because we could easily take buy side, come down below it, and then find support or resistance, and then we could continue lower towards this large sell side. kind of doing the retracement back up into this gap here, most likely. See if we can get at equilibrium or above of this range here. Get to a discounted area, and then we can maybe see if we can look for a short. I mean a premium area, and then look for a short. So if we were to not wait for the first presumed fair value gap, we could take it and trade off this order block here or this order blocks up here. Hit consequent encroachment of the new day opening gap. We had a strong movement out of that area after hitting that consequent encroachment. I'm so nasally when I say that. And then we have a order block here, traded into the 25% retracement level. I really like that entry. And then aim for buy side up there. All right, I'm gonna wait till 9:50. See if we can get a something at that macro. If I can't get something there, I'm probably gonna cut the stream a little bit short today. Want to do a workout before I have to go to work, and spend some time with my family this morning. All right. Now we're going to watch shift and order flow here. I might actually take a trade if we do get a shift. So let's see here. We got order block here. For that one. Order block there. We can print a green candle and then a red candle below that green candle. Be the shift in the order flow.